Today we're looking at what the street's expecting from the upcoming Union Budget 2022, which will be presented by the Finance Minister Nirmala Sitharaman in Parliament on the 1st of February. To discuss this, we have with us Andrew Holland, CEO of Endus Capital, Nilesh Shah, MD and CEO Envision Capital, and Mahesh Patil, CIO Aditya Birla Sun Life AMC. Great to have all of you together, such powerful voices to give us a real insight into what the street is expecting this time around. And I must say, with markets having been very upbeat at the start of the year, the question did come to mind: is this a pre-budget rally? Even though I know for the most part, experts these days tend to dismiss any kind of lead-in, according to budget expectations. But just given the kind of momentum we continue to see, what can we expect this time around? Mahesh, let me start off with you.
Sure. No, so I think on the budget perspective, I think it's very difficult to say. But I think one thing is clear that we are coming out last year from the pandemic, and while the markets have rallied and corporate earnings growth has been fairly strong, but the underlying economy is still really not to its full potential, right? It's still struggling. I think consumption it has been weak. We see rural consumption getting impacted, and I think it's important. And this budget also is like 2 years away from the final elections, right? Election which are there. And so I think the government will do everything in its power to see that growth comes back, right, to its potential growth rate of around 6.5–7%, which what we should be looking at 2 years down the line. And to enable that, I think we clearly on the spur demand, which is still kind of weak. I think you'll see measures being taken towards that, especially the rural side of the economy, which has got impacted after the second wave of COVID. Right. I think you will see some support to that. And also to improve general consumer sentiments have also been a bit weak and tracking lower. So all in all, I think normally the budget we've seen a lot of impetus to investments, for future capital investments, the infrastructure side. While that will continue, I think, which was there in the previous budget also, I think those efforts towards that will continue. But at the same time, I think the government is also trying to really the fiscal deficit. After the pandemic, we've seen this year we'll have a fiscal deficit of around 6.8%. We're expecting that probably they would be comfortable around 6% for next year, because I think the government will slightly go slow on the whole fiscal consolidation path and ensure that the growth stimulus is there for the economy to really come back to its potential growth rate. So some boost to consumption. On infrastructure, there will still be challenges because the government ability to fund that is going to be limited. Right. So I think we could see some infrastructure bonds being. I think budget will probably pave a way for that. Right. There is a holding company which has been formed by the government, right, to look into the investments. So instead of on balance sheet, you could see some off balance sheet kind of funding being done, to spur the investments into the infrastructure side.